Hello, everyone. Welcome to the On Time, On Target Financial Thought Leadership Series. And I'm privileged to bring to you today a repeat guest, Matthew Torres. This is the first time in the Financial Thought Leadership Series, but he has been on the podcast before talking both investing stuff as well as some entrepreneur stuff as well. Also, earlier, you may have noticed that from my Financial Thought Leadership Series, I had a guest on, Indy Rossi, and I said she is my youngest guest ever. And well, that was before I knew I was going to interview Matthew, who now takes the record for youngest guest ever on the show. And specifically why I wanted to bring Matthew on, and we're recording this the week after the craziness with GameStop and Wall Street Bets and Reddit. So that's why he was a must to fill the last spot on the show that I had. So we want to kind of take some time, talk about that stuff. I have my perspective, which is just one perspective. He has another. I asked, before he came on the show, did you participate in this? And I'm like, yes, just save all that and we'll talk about it on the air. But Matthew, thanks again for coming on the show. Why don't you let the folks know a little bit about yourself?
Sure. So as you mentioned, I'm an entrepreneur and investor. I've been investing for around 5 years now. Yeah, I've set up multiple businesses. I've created courses to help people learn how to trade and invest both in the short and long term. So yeah, my goal is really to advance myself. I like develop myself in the finance world and help people make money work for them instead of having to grind out at work for 9 to 5s and things like that.
Yeah, well, I hear you. That's my passion as well. Albeit a few decades older than you, but it's always so much fun to talk to you because it's so impressive how what I would consider a grasp on life perspective that you have at such a young age, and that's just going to benefit you so greatly as you go forward, and that you're already looking to help others do the same sort of thing. So. Thanks again for taking your time out to do this interview today. So let's talk about Reddit and Wall Street Bets, and I'll go first because what I know is very little, and you have me beat 100x on this situation. So it was New Year's Eve of 2020, right? So we're all sitting around. This is the first time I heard of this Wall Street Bets thing. So I go out to dinner with a couple of couples, and one of the guys is talking about, Steve, you got to look up Wall Street Bets. This is crazy. This is a great place of information. There's conspiracy theories. There's some entertainment there. He goes, you have to check this out and what these people are talking about. He goes, because there's like 1 million people on this Reddit thread. And, fast forward, now we have the Wall Street Bets thing blows up this week. And now, on Wednesday, I think it was 2 million subscribers or followers or viewers, and now it's 4 million. So kind of crazy. So start us off by when you heard of these folks, and then lead us on into this week.
Sure. So I've known about Wall Street Bets for a while now, maybe since 2018, but they've always been out, or at least I've always seen them as people wanting to get rich quick, which I still think that's mainly what most of the people there are. A lot of them are just throwing all the money they have into stocks. They call them YOLO trades. You only live once trades, which take on extreme risk. Of course, there is extreme upside and extreme downside to those trades, which to real traders, that's not a good ratio. You always want to have more upside than downside, preferably at least 3-to-1. But yeah, that's basically what those people on Wall Street Bets do. They just bet all their money on one stock. A lot of times they'll say, hey, everyone buy up this stock, and they even pump up stock prices with the amount of volume that they can take on and influence. We even had Jim Cramer talk about them on CNBC, and that really gave them more traction, and it got them to those 4 or 5 million subscribers that they have now.
Yeah, he certainly did legitimize it. And you couldn't ignore the news cycle either, right? Because everything is about Wall Street Bets this week, and of course the craziness behind GameStop. And one thing I like that you said, and I agree, I do some trading on my own. I have some folks that I get together with in the mornings, and it's not an army of 5 million by any means, but it's a few of us. And yeah, we talk about certainly the risk ratio. Specifically, I use a 3-to-1, so I was kind of glad to hear you say that. Everybody has a system, and I know you have a course out on short-term trading for folks to take and learn more about it. We'll get that towards the end. But back to Wall Street Bets, I still haven't logged in. I've only been on Reddit a little bit. If somebody sends me something, I will end up there. It's not a place I go to seek information. Is that how you use Reddit too, or do you have things you actually like actively participate on Reddit?
Yeah, so I'm not really on Reddit a lot. I only go on Reddit to check Wall Street bets. But one thing I'd advise people to do is don't go on Wall Street bets and take the trades that they're telling you to take. They're by no means qualified, registered investment advisors. These are mostly younger kids, or not kids, but they're teenagers to some people in their 20s, and they take great amounts of risk. But sometimes they do give out good trading tips, although it's rare. So yeah, that's what I do. I just go on Reddit, see what they're talking about, and use the information that they're throwing out, what they're going to buy, for myself, and I'll go on those stocks and wait for good confirmation of a trade, make sure there's volume there that they're putting in, of course, and I'll just profit off of that.
Yeah, you bet. And it's interesting because the big controversy this week was, is it illegal? Which we won't get into that. I mean, you know, on the surface, market manipulation is illegal. However, a lot of trading is not, and there's really fine lines there, which I'm sure Congress will be digging into. We don't need to go into today. But interestingly enough, well before your time back in '99, there were AOL chat rooms that had interesting names that kind of did the same thing, brought a bunch of people together, and they would take trades, but specifically these sorts of trades where you look for an over leveraged short position and you just start buying it, knowing that the shorts can't take the pain for a very long amount of time. So, so when you were checking in on Reddit, did you ever come across? I guess the ringleader was. I guess he has a site called Roaring Kitty. I looked this up on CNBC, so if that's my source for my information. 34-year-old advisor. I can't remember his name, but it's not important. But you have a professional advisor he has a YouTube channel, which is not uncommon. I have one. And then he's also under a deep effing value. We'll just say effing instead of the full word there. But yeah, did you see him? Is he typing in bold caps or all caps, going, hold on for dear life and go go go? Is it that sort of? Was it like a cult / flash mob style mentality?
Absolutely. Everyone's saying hold, we don't sell. We're holding through the pain. Everyone's holding GameStop. And as a trader, I'm thinking, what are these guys doing? There's so many shorts piled onto this stock. After what's happened with Robinhood and everything like that, they're still holding. They're holding through the weekend. And GameStop is a blockbuster, basically. Their sales have been declining for 2 years. There's no real value in the company in the long term. So, just seeing these kids and this guy here influencing them, saying, hold on to the stock, even though we know it's a dying stock, it's just something I don't like to see as a trader.
Yeah, it's crazy. And in theory, I try to relate it. It's not really a Ponzi scheme, but it's kind of like a Ponzi scheme, right? Whoever's in early benefits the most. But you're right at and when you hear the term, bag holder, who's going to be holding that stock? Because if you value it, you're right. It's either worth zero or probably not quite zero, but going to zero over time because it's an outdated business model like Blockbuster, invalidated. You don't need a brick and mortar software store, right? You can just download stuff now. So, it's not worth zero, but it's certainly worth less than $10. So when it's up at 3, 4, 500, you're right. At some point, the fast money, I won't call it smart or dumb money, but the fast money will bail. And by the time it says, okay, it's time to sell, I mean, that stock literally will be in the 2-digit range, if not single-digit range. So I do think a lot of people are going to get hurt. When you're on there, did you see are there other people taking the other side? Are there people saying things like, y'all are crazy, you're dumb, or is it straight cult, you're only there if you believe?
It's exactly like you said. It's like a cult. It's just a mob of people with the same mentality. None of them, I honestly, looking at them, is just, there's that guy you were talking about, influencing them, saying, we're holding this and that, and then they're just following the same mentality. There's no individuality, no uniqueness in each and every one of them. I was scrolling through and I was looking for exactly that, someone trying to, stop them, like telling, this is madness or whatever. But if you said that, you'd be the weird one out of the group.
Yeah, I figured it'd be like a cancel culture. You'd either be booted, or they would take to your other social media and shame you as if you wish you had never existed, right? So
Yeah.
but that's kind of interesting, because if you don't have another point of view in a mob slash cult type scenario, I make the joke, and this isn't always true, that there's only two ways out of a cult, and that's either go to jail, which is the optimal one. The other one's death, right? That's how those things tend to end. Obviously, we're not talking about that in Wall Street
Sure.
bets, but certainly there's going to be some people hurt out of this. What's your opinion? And again, these are opinions on. Do you think that that they deserve that, or that there should be any, all this talk of protections, this should be illegal? Do you think it should be? What's your kind of initial just take on this?
I think Wall Street bets. I think it should be more regulated because of all the influence that these people are having on the community, like on the community of, or not really a community, but younger people. But yeah, I think it should be more regulated. But at the end of the day, everyone takes their own personal financial decisions, and that's up to every individual. And you can't tell someone to do something or not to do something. So if they're hearing someone, if they have a disclaimer saying, I'm not a registered investment advisor, I'm just stating my opinions, and they're using those opinions as their personal investment plans, we can't really get any legal drawback from that.
Yeah, I think there's another point of view out there that it agrees with that everybody should be able to take their own risk. And this has been kind of a little guy versus the big guys, war, if you will, or it's just people trying to make money, and you have a situation that presents itself. And I commonly say, in the market, they're saying, what are you trying to do this year? And I'm like, well, I'm trying to, take what the market gives us, right? Because there's so many different things that are out there. So you have this thing going on, and if you participate, you're trying to make money. You aren't trying to necessarily overthrow the hedge fund. That's a byproduct, right? But it was interesting that if the government gets involved and starts trying to regulate this, then it becomes protect the population from itself, which of course people in power think they're doing. But there's also the other side of that, is that somebody presented this morning on Twitter that I follow, and she said this is if they would attempt to regulate this would be a keeping poor people poor. And I don't mean really poor, but, and I know she didn't mean that either, but it'll keep people that are younger and looking to build their wealth over time. It will stop their ability to do that, right? Because if you can 400x your money on some crazy Reddit thread, then you should be allowed to do it, right? So
Sure,
it'd be
yeah.
interesting to see what sort of fallout there is from there. From the folks you work with trading, or your friends, what was kind of your take from your circle of influence? Were folks like, you got to get on this, you're stupid not for participating, or were they like, whoa, what's going on? Or what was your experience with those?
So yeah, from the people I teach and the people I mentor, I always tell them there's always new opportunities. If you miss a trade, if you miss an opportunity, don't get FOMO, which is fear of missing out. You never want to get FOMO. You never want to take emotions into a position. So there was a lot of traders out that I'm mentoring that are saying, "Oh, I missed the trade. I didn't look at your alerts on Snapchat or Instagram. I should have took the trade." And I'm telling them, just calm down. There's always new opportunities. You rather get out of this making no profit than down $1,000. And you always, every single day, there's new opportunities. There's new volume, new trades. If there were no new opportunities, we wouldn't see people, making more money every day. So that's really what I advise, my students to do, is just, if you didn't take the trade, don't take it now. The move is gone, and wait for a new opportunity. And I also tell them, but if you're taking a trade based on someone's opinion, you're not really getting anything out of that. You could make $2,000 from that trade, but at the end of the day, you're not learning anything that you can take with you to another trade. So I always advise them to, if you didn't take the trade, don't take it. Just, wait for a new opportunity.
Yeah, there's several points to unpack there in what you said. First of all, yeah, FOMO, right? People, by the time you see it in the news cycle, by the time people stop what they do on a daily basis, whether they're working or a student or whatever, and they check into this, right? The move's already been made, and you're right. That's when people get hurt and buy at the top because they're like, oh, it's going up forever, right? Because that's what deep value guy said. And then another one is, you mentioned you missed it, and I think from a trade perspective, there's always another one. I tend to say words like "you missed it." We missed that one. Big deal, right? Because there's always another one and another, and it takes a lot of maturity for that. Because folks are like, "Oh, this was the trade of my lifetime." And it's like, "Oh, they all will be the trade of your lifetime, right?
Yeah.
Until the next one, right?" So but the other analogy I use is a baseball analogy, which resonates with a lot of people, is if you're in the batter's box, there's no called strikes in investing. You can sit there and look at pitches all day long, right? You only are taking the risk if you swing, and then you know if you hit it or if it's a strike. So yeah, to be able to sit back and watch this, hopefully people are learning from it. And even if you participate, you mentioned the so what if you make $2,000? Man, I love that perspective because you're right. If you log in at the right time, you caught this early, you could make a couple grand on a very small account, right? Or if you swing a bigger bat, you could put some zeros on that. You can, but you're right. You are clipping something out of the market. You're not necessarily building wealth over the long term, or really learning how to do this again and replicate the investing model over time. But I would say, and I'm interested in your thoughts on this, for all of the people that are participating, do you think it's a net gain or a net loss from the people that say we fast forward 2 weeks and GameStop's at $3? There's obviously going to be some carnage in people's lives. Do you think that's a net gain or a net loss for society?
It's a gain. I definitely think if people lose the money that they have, or at least it depends on who you're talking about. If you're talking about hedge funds, of course they've already lost near $92 billion. But for them, it's going to be a gain that GameStop goes back down, because I heard that they're still packing on those short positions. But I think traders that if the stock does go fall fall to low prices and they lose a lot of money, I still think that's a gain for them. Especially for new traders that are putting all their money into stocks. I hope they lose their money, because that's going to teach them more than making $20,000 from that trade. That's going to teach them, to use your own thoughts, your own perspective. Do your due diligence. Make sure you're getting into a trade when there's a clear entry, a clear trigger, clear high volume there to back up the trade and take it to higher levels. So I think new traders, if they I think them making a lot of money just getting into trading does them more of a disservice than it is a gain.
Yeah, I agree with you. I think that because there's kind of two avenues which I envision, and I envision this from normal investing too. If somebody opens an account and they lose money, they, close the account and they never invest again. Well, that experience, instead of them losing, the $500 or the thousand, it cost them, hundreds of thousands of dollars of gains that they should have had if they just funded if they did even basic investing over a lifetime. So I think you're right. There's the people that are going to get burned so bad that they take their football and go home, never participate again. Or what I kind of agree with you, that it's going to be a net positive for society, because I do think a lot of folks are, pretty smart and understand what this is, and also understand that when it starts going south, it's probably going to go south in a hurry. And even on, I think it was Thursday, the peak and valley in GameStop alone was 500 and 100. So I mean, even though it started dropping, I was sitting there going, haha, okay, it's going to $8 today. It turned around and it's back at 300. So good on the cult leaders in Wall Street bets for making the crowd believe, right? So but yeah, I think overall, and this one thing I have this conversation quite a bit, and you being on the younger side of this relationship for sure, is that I love it on how many of the younger folks are out there and becoming investors. And even if you do get smoked in a trade, guess what? Any venture you go into, there's times when you lose, right? If you're out there and in play enough, for sure. So I think it overall is a net gain. What everybody's going to learn from this. What transition into Robinhood? Are you a Robinhood user, or you don't have to divulge that if you want, but opinion on Robinhood?
Sure. So I only use Robinhood when TD Ameritrade has slow fills. So I mainly use TD Ameritrade. I think it's an excellent platform. I think it's the best trading platform. But a lot of times, since I'm trading with, big capital, a lot of time my fills are slow because there's not many, or the sellers can't get connected to me fast enough. So when those things happen and I can't, buy the amount of contracts that I want to buy, I'll move over into Robinhood and do it there. But I don't use Robinhood too much because, just because of, the user interface is clean, but there's no real way to do technical analysis and have clear entries on Robinhood.
Yeah, I think that I'm not a Robinhood user, but I do for, I've been saying for folks that I talk to, they're like, hey, can I sign on with you for wealth management? And I'm like, okay. And then once they start saying, they're kind of entry level numbers, I'm like, well, I'm really not the person for you. Start on Robinhood and kind of get, so I've been pushing folks towards Robinhood just to kind of get started. And I'm wondering how, I think if anybody loses out of this, it's going to be Robinhood. Just because of the PR impact of this. It seems to be like this is their wheelhouse of kind of your younger slash newer investors, not newer investors, not necessarily younger, but it seems like the same crowd. And then Robinhood's handling of all this does seem pretty poor. You didn't happen to see the CEO on CNBC, did you?
Oh, no, no, but I do know that, a Robinhood, I like you said, there's going to be, a lot of negative feedback for more than what there is right now, because of what has happened. But I think who is to blame as well, not to get too into it or anything, is, Robinhood's provider of shares, which is Citadel. Since they provide the flow to Robinhood, if Robinhood doesn't have shares to allocate to investors, well, they can't really do anything. And I know Citadel, I can't confirm it, but I heard that Citadel, before alerting Robinhood that they couldn't distribute any more GameStop shares, they took on quite a large short position, which I thought was laughable.
Yeah, it's interesting. I think a lot of people will learn really how the behind the scenes stuff works here. And for Robinhood to reach out for another $1 billion of capital to kind of survive this, and then how the interrelationships behind the scenes is pretty interesting. It's kind of geeky, kind of into it for sure. But yeah, for those that are following along at home, shorting, you have to borrow those shares to sell short. So there's a couple things going on there. And then what I think is the root cause, and would love your opinion on it too, is, and I think this is the regulatory reform that'll come out of it, is the amount of shares that are available to short. You have companies that you have the float, which again, for those that aren't living this stuff every day, is the amount of shares that are kind of on the open market that aren't locked away by the company itself. But you have short positions that are 100% or more, and yeah, that leads to exactly this situation. So I think that's what will come out of it, is some form of regulation of maybe 50% of the float, and the float's kind of a not necessarily a no exactly known number anyway, but something along those lines. What do you think will come out of it?
Yeah, so like you were saying, the short, or at least for GameStop, I know that the outstanding shares is 65 million. Shares float is 50 million, and so there's around 15 million shares that aren't on the market. Belong to executives and things like that. And the short float for GameStop is 140%, which is completely insane.
Yeah,
I remember when Tesla's short float was like 30%, and I thought that was crazy. Um, but yeah, it's 140%, meaning that there's a lot of naked shorts, which are illegal. But yeah, I think that's crazy. But could you expand on that question you had earlier?
oh, no, I was just more pontificating out loud about what do you think will come out of this as far as the regulation? And I think anything that
Oh,
comes out of it is either is going to really hurt the little guy, right? Because you're really not going to hurt
yeah.
the hedge funds. And even if you tell hedge fund it can't even lever up, like that, then they'll pivot and find some other way to try to maximize returns. So I think either nothing might come out of this other than a bunch of talking, which is not uncommon, or some regulation according to the short float.
Yeah,
It's
I think the same thing. I don't think regulations will, shift because of what's happening. I don't think so.
Yeah. Well, so how about this? This could either be done next week and we don't really hear of Wall Street bets again, or this could be the first of this sea change of flash mob investing, is probably the funniest comment I've heard. What's your take? I don't know. My honest opinion is I don't know, so I don't really have an opinion. So
Well, I think with the amount of exposure Wall Street bets has been given, but by the media and everything like that, I think we're going to see a great increase in amount of people that want to get into investing now. Because I even heard at school some girl was talking about, or not at school, of course, online school, but she was talking about, I never heard of stock trading before, but now that I've heard about this with GameStop, it's kind of interesting. And once I heard that, I was like, yeah, there's going to be a lot of new people wanting to trade. And I don't want to advise people away from trading. I actually want to encourage you to get in there and start investing, but do it the right way. Don't get in there and start throwing your money at in speculation. In your emotions. I feel that this is going to go up. You always want to have a concrete plan, concrete entries. So yeah, if you want to get into investing, trading in the short term, specifically, do it. I 100% encourage you to do that. Just do it in the right way and be prepared for the real market, which is why I always encourage new traders to trade to simulate, to trade on paper trading accounts, which are simulation accounts, and really prepare each day, identifying patterns, identify what causes a stock to go up, and really the technicals and you know everything like that, really get into the technical analysis and just know how to trade, and have experience trading before actually getting into the real market. So it's not a matter of don't trade, it's just do it the right way.
right, and I think the you're right on the increased awareness from everybody. And I'd heard I can't remember the source. I think it's probably CNBC or one of the other pages I follow throughout the day. But it was one of the dads was talking about it. He goes, "Well, this happened today." He goes, "I coach my son's basketball team, and after the game, we normally hang out and talk about what we need to do better or what." And he goes, I'm now at the first question was, what are options and how do I buy and sell options?" And he said, "I ended up talking for 30 minutes with my basketball team, sitting there in the locker room post game." Talking about options. Like, he's like, "Well, this overall, you're right. It's education, so it's a net gain, but certainly it reminds me of back in the days when you had movie star. This is like 1999 before we had that big crash, before your time. But people are pointing to that, saying, okay, the stock market's in a bubble. Maybe not, certainly not as bad as the internet bubble, but yeah, you would have your taxi cab driver back when taxis were a thing would have stock tips for you, and it got a little bit crazy there for a while. But you're right, I think it's a net gain for everybody to learn this. And speaking of options, so if you choose to share, for participating in something like the Wall Street bets thing, you think buying or shorting the stock outright is the best way to go, or the use of options?
So the what I like to teach my students about shares and options is, first, definitely learn how to go long and short with shares first, and then go to options. Because with shares, if you go long on a stock, um your the amount you can lose is just the amount you invest, theoretically, right? The stock's not really going to go down to zero, or it probably won't. But when you short a stock, the amount you can lose is theoretically infinite. So shorting with shares is a lot less risky than shorting with options. But it doesn't matter if it's going long or going short. I always advise traders to first trade shares, go with shares because it's a lot less risky, and then go into options, because for people that don't know, one options contract equals 100 shares. You're borrowing, you're given the option to buy a stock at a certain price, which is a strike price, and it's 100 shares. I won't get too much into that. The point is that options are a lot can be a lot riskier than shares. So I always think, if you're just starting off, trade shares, and then once you get more experience and you're comfortable with shares, then transition into options. But the optimal goal is to transition into options, because that's how you'll really um, multiply your profits.
Yeah, no, I would agree, and I generally, think more long term, more wealth building. Own the, once you have the capital, own the outright shares or short the actual shares. Especially in something like Wall Street bets, where all you know is it's going to move. You don't know whether it's going to go up or down or when it's all going to happen. So I think options for that, to at least just minimize your exposure to loss, right? Whatever
Yeah,
you buy the contract for, you're out, and then it could be multiples to the upside. So, all right.
yeah.
Um,
I wanted to just sorry. I just wanted to expand on that, on what you said about shares. I forgot to mention that, but yeah, of course, options expire, so you don't really own the shares, but shares, you own them as long as, as until you sell them. So yeah, of course, if you're just looking to invest long term, buy shares. By all means, just buy shares, because shares are a lot less risky in the long term. I only use options for day trading and scalping. So I think shares are the best choice for, longer term investing for sure.
Yeah, you bet. And I even get into the philosophical. Some people always want to, buy a share, and how can I make 10%? And it's just I like individual stocks. And the reason is because I view it as part ownership of the company, which it is. Uh,
Yep.
Very small part, right? You don't get to sit in the boardroom.
Sure.
But if you look at it from I'm buying into the leadership of this company, then you're going to hold it for a long time, right? It's the same decision as like buying a house, or making a long-term commitment to something is the way I like to view it. And more of a, over a lifetime, you think 40, 50 years of investing, you acquire these shares. I'm not completely buy and hold, but I do like the buy and hold philosophy. And as long as the thesis doesn't change, right? So, I've had Apple for decades now, because guess what? It's still the best tech firm out there, and it's also a luxury firm. So,
Yep.
I'm going to probably hold that for another 20, unless something crazy.
Absolutely. Yeah.
So thanks for bringing that up. I do think that's important. People understand the difference between wealth building over time and
Yeah.
trading, which now you're in a zero sum sort of scenario. All right, well, let's transition into you've talked about your course and folks that work with you. Tell us a little bit about your course, and where folks can find it, and what courses you
Sure.
in the future.
Sure. So right now, the course I have out is a short-term stock trading success course, which really gives you the average person. So the course really gives you the foundation you need to build. It's like when you're building a house, you need a strong foundation. It gives you that strong foundation you need to build up your strategies and your personal ideas into trading. So it teaches you everything you need to learn about stock trading, all the technicals, a lot of fundamentals as well, to get into the market and get comfortable in the market. And then in the future, right now I'm working on a advanced trading course, which is going to be the follow up to that course, which is going to teach you how to build your own thoughts and your strategies, how to build your own trading style, so you can build on top of that information that was presented in the prior course and just add your own sort of twist to that. And then on top of that, I'm working on a long-term investing course, because I know there's a lot of people that are not interested in short-term trading, since it takes, a lot of time and dedication, which is fine. I invest in the long term as well. So that I'm going to build that course for people that just want to invest in the long term. I'm going to talk dollar cost averaging into the S&P 500, dividend investing, everything like that. And then I'm working also on an options trading course for people that do really enjoy the short-term aspect of the stock market, can go ahead and get into that options course after you built your foundation.
Yeah, well, that's fantastic. I'm very excited for those courses to be out someday. And where can they find your course?
Sure. So they can find them. There's a link in my Instagram. My Instagram is FRRIIO, FRRIIO. And there's a link in my bio that says learn how to start trading now. That's the link to the course. And that'll be the link for all the courses in the future.
Okay, sounds good. And for the listeners out there, that will be in the show notes. I'll have the link to his Instagram, Matthew's Instagram, and then that's kind of the funnel you can go through to find him, find his courses, and all that. And lastly, I would be so. Why I love talking to Matthew is I just love the way you think, and the way basically you're, from an entrepreneurial perspective, you have your long-term wealth building, which is like, okay, that's money that's growing over time. You have trading, that you've developed a skill set and you're good at it, and you're making money through trading. So that's more of a hands-on active. So you got kind of your passive long-term wealth building, kind of passive, active, very active short-term. You also have now passive income developed through your courses, where you've taken now your expertise, put it into course form. People can access that as much as they want. And then also you have an entrepreneurial venture out there, or more. But you want to close with just telling us a little bit about what's going on with your. I know about the shorts personally, so you can start with that and then kind of expand it however you'd like.
Sure. So on top of investing, I also do build small, like multiple online businesses. Yeah. So right now, as you mentioned, I have a shorts company called Real Shorts, and we sell, gym shorts for men. And they're pretty cool. And I started that business at the beginning of 2020, since I knew with the pandemic people weren't going to be able to, purchase things in store. So I foresaw like an increase in online traffic. So I thought it was a perfect time to start an online business. So I went ahead and started that shorts company. And in the future, I'm planning on starting, some more online businesses. Some focused towards more towards marketing, and other ones also focused towards selling products online, similar to the Real Shorts business that I currently run.
All right. Well, I look forward to see what you're up to in the future. And as for people listening at home or watching this, there's a lot going on, and I love that. So if you're thinking about taking that first step to do any one of these, just realize, obviously the first step is the hardest. But Matthew's taken that first step in several areas, and just listening to him, hopefully that inspires you to believe, he's got all these things going. You can at least do the one, right, and kind of get out there and make your dreams a reality there. What I'd like to close with, Matthew, is what advice, everybody wish they'd have done something a little bit different, or if they, or what have you learned, or what advice would you have for others that are trying to follow in your footsteps?
It's to start now. That would be my number one advice, is to start now. Because if you say, oh yeah, I'll do it in a little bit becomes a year, 2 years, 5 years, and you're just gonna delay it. So I would just say start now. If you want to start a company, start it now. If you want to start investing, start it now. And the best way to do that is just by emulating a successful business plan. But that's my main advice, is just to start now, and to start learning, or to start building your business right now, because you're not gonna you don't want to put that later.
Yeah, you bet. Well, you are there should be a picture of you in the dictionary or encyclopedia under start now, right? Because
Yeah,
you certainly lived up to that. So, all right. Well, thanks again, Matthew, for coming on the show today.
sure. Yeah, thank you.
You bet. All right, everybody. That's all we have for today's show. Please reach out to me through ototnow.com with any questions or comments. Thanks again for joining Matthew and I. And here's to you fighting the good fight every day to be on time, on target with your financial goals.